Okay, well, it's time for our market update. Hope everyone had a great weekend, and it's Monday, so we go again. Let's see what this week has to offer. Last week was absolutely excellent. It was fantabulous. We got some nice trades. We got a decent one on the Friday as well. If you guys took that trade, I'm sure a lot of you will be in profits. If you're still holding, great. If you're not, that's fine. Hope you've taken profits and de-risked that trade. Obviously on Discord, we've got a message, we've got a screenshot that came in from Invisible J, which is amazing. 72.42% on 30x leverage. Not bad. And I'm sure, this move on 30x can be very, very profitable if you risk management properly. So well done, Invisible J. Keep posting. And as you guys keep taking these signals, keep posting. Let's see how we're getting on. All right. So let's go straight into the price action. Guys, we've been saying this for months. We've been saying this for over what's it now? Almost 3 months. And it's going to be the same thing, but I'm going to say it again, especially if you're new here, especially if you're coming across this channel for the first time. Now, we've been in this range for almost 3 months. That's fine. I'm sure if those of you who follow this channel religiously, you're tired of hearing me say range high, range low, confirmed, internal range, bearish, bullish. But the price action is the price action, and that's what price is doing. Goes without saying, we've had this internal range. Okay, this internal range at premium is at the top half of our global range. And this internal range is part of that expansion leg up from the range low. We have higher high, higher low, higher high, higher low. We sweep the high for that second entry. Remember that second entry? We sweep it for that second entry and we get a nice bearish move shortly after with a beautiful change in market structure, which we capitalized on. Okay, so that was a really juicy one. Nice way to end last Friday. And let's see what the market holds, today and this week. Well, I actually entered a trade today. I'm going to talk about that. And I'm going to talk about how that trade progressed. Okay, so what we're going to do now, well, obviously, if you're looking for the long-term plays, you're waiting to see what price does at this range high. We've broken structure bearishly. We have swept that prior high, which means this becomes a weak low. All right. So ideally, technically, price should come down to that weak low, but we have some things stopping it. We have this daily. You can see on a 12-hour as well. But I'm pretty sure it's a daily. Oh, is it? Let's just double check. That's a black bar. Is that a black bar? Yes, that is a black bar. Okay, so we've had this daily level, which has been mitigated now. Okay, but we look to be having also an internal level that is not yet mitigated. Hence why it's still on my chart. Let's see what time. There we go. Well, it's on the 8-hour time frame. So perhaps I ought to label that just so I know what time frame that demand zone is at. So that's the last obstacle, really. That's the last major obstacle stopping price from testing this weak low. Okay, so if we start losing this level, well, the chances are you're more likely to rotate to at least get a reaction here. Now, whether or not price is going to come down and break through that level, nobody knows. Whether it's going to SFP that level and rotate again towards the range high, nobody knows. So we're going to wait and see and wait for our confirmations as we get to those regions. All right. Now, what's the bullish scenario? Well, the bullish scenario is, I know we've just broken bearishly from this range at premium, but we have this fair value gap that we've left. Remember what I say about fair value gap. Fair value gap is basically a sign of inefficiency in the market, where the market has overextended perhaps too quickly. All right. Then after we have a fair value gap, price then acts as a sort of magnet. All right. The fair value gap tends to attract price back to it in order to establish efficient price action. And we can see this example many a times in Bitcoin. Here we have a fair value gap. All right. And this fair value gap, what did price come to do? Price comes to fill it back. All right. Here we got a fair value gap. What does price come to do? It comes to fill it back. All right. Where else do we have it? Look, we have this very expansive move down. What does price do? It accumulates and then it recovers it shortly after. And then we have another recovery bearishly. And then we have another recovery bullishly. Okay, so these appear everywhere. So whenever you see a massive expansion like this, don't be alarmed, because the chance that you do come to recover that is still high. I know when you're new to trading and you see a massive move like this, you think, oh my gosh, I've missed the move, I better get in there so I can carry on that move. And yes, that could potentially happen. But when you have these fair value gap, there is also a likelihood that they get filled. Okay. Also, what else can we see? Well, look, we had this expansion leg up here. What did price do shortly after? Price came to fill the gap to establish efficient price action. All right, here we go again. We had this expansive move here. What did price do? It came, filled it a tiny bit, expanded again, and then it came back to fill all these gaps to establish efficient price action. Now, what did we have here then? Look, we had this massive, bear fair value gaps. It simply got filled. Here we had, bull fair value gaps. What have we done now? We've simply filled it. So, is it far-fetched to think that because we've had this bear fair value gap, we are rising back up, we are building back up? Is it far-fetched that we come back to fill it? Of course not. So that's our bullish scenario. Is it far-fetched that we come back and test this whole entire range? Of course not. Is it far-fetched that we still manage to break out of this range bullishly and test the real global range, the all-time high? Of course not. So what am I saying here? I'm saying price can go up or price can go down. There you go. That's it. That's all I came here to say. Price can go up or price can go down. Quite basic, right? But trading is not about predicting whether price is going to go up or price is going to go down. And the moment you get that out of your head, that's when you're really going to start seeing the market the way you are meant to. Now, a lot of people ask me, TJ, is gold going to go to, this? Is Bitcoin going to go to this? Is that going to go to this? And I simply answer, I don't know and I don't care. Why? Because what you need to do is not necessarily predict whether price is going to go up or down. Is you need to watch the price action, read the price action effectively, wait for price to go up and down, and then get involved. Okay, so that's how we trade here, and that's how we do it. So price can go up, price can go down. Let's talk about two cases then. Let's talk about the bulls and let's talk about the bears. So first of all, we're going to talk about the bearish scenario. Well, in the case price continues to come down, we're going to treat this as a range that's developed. Obviously, we had a range at the top. We've broken down. We've now established this range. I'm seeing this as a range. This is a range for me. And this is a range because we have our range low over here. We have what looks like to be our range high all the way over here now. Okay, it may not be a confirmed range yet, but we're still going to treat this as a range. So I'm just going to go ahead now and draw that in. Okay, I'm going to go ahead and draw that in, and this will become clear in a second exactly what I'm doing. What color should we make that? Let's make that green, and let's make that thick. There you go. All right, so this is our range now. Prior it was there. Okay, prior then it moved up to here, and then we recently got a break out of this range, and I'm going to talk to you about how I entered that trade in a sec. But this is our new range. Okay, this is our new big range. And let me just check something. I'm just checking exactly, first of all, how long that range is and where that 50% mark is. Yes, we can treat this as a range. All right? So what does that mean? Well, if this is our range, well, what do we expect in ranges? We expect our classic Model 1s and Model 2s, all right? Which if I teach you, you know all about that, what a Model 1 and Model 2 is. So we're looking for a trade at this range low. Now, this range low looks to be quite nicely positioned because we have this 8-hour supply, so 8-hour demand below it. So in the case we do rally down, okay, and we actually do what? We sweep. Let's say we have a bar there. Okay, it doesn't quite close below our range. We don't want that to close below our range, and if it does, we definitely do not want a convincing close. let's say we have a bar there, okay, and that bar manages to close within the range as well as sweep the zone, as well as give us a nice market structure change. So I'm going to make this smaller. Okay, do you know what? Let's just make this nice and tidy today. Okay, I'm in a good mood, so let's make it nice and tidy today. So let's say we get something like this. All right, so price comes down, it sweeps, that prior low, of course, for that second entry, and then it gives us a nice, clear as day change in market structure there. All right, it comes up. After that, I'm going to be looking to long that. That will be where I'm looking to long, and that's this idea number one. Okay, I'm going to get rid of that. Now, idea number two. But for idea number two, price could actually say, do you know what, I'm going to come down, all right, but I'm not quite going to sweep that level. I'm going to react off some sort of zone here. So perhaps we're going to check here, see if we've got any zones left over. So let's just do that quickly. Let's see if we've got any zones within that wick. And if we've got a zone within that wick, that will be a potential POI or AOI, whichever you prefer. Okay, POI, point of interest, AOI, area of interest. So no, not quite. We don't really have a zone there, do we? Yeah, I guess we will know that's not a zone. We're running out of options now, aren't we? Nope, so we do not have a zone. So what that means, guys, what that means is, in the case that we start breaking below this line, that move down could be quite quick. Okay, that move down could definitely be quite quick. All right, so we won't be looking for any model tools. We'll be looking for a model one. All right, now I did say I entered a trade earlier, and I'm going to tell you how I entered that trade. But before I do that, we're going to talk about our next option. Our next option is if we actually break this range low, we close below it. However, as we close below it, we start to see a nice shift in market structure as we come into our zone. You all right? I'm going to be in there. That's this idea. Okay? If I see that, I'm going to be in there. Where am I looking to see that? Perhaps this is an 8-hour zone. So I really want to see that perhaps maybe on a 15-minute at least. A nice change in market structure on the 15-minute. All right, so those are my two short options. My two long options immediately. And obviously we've got this level below, all the way down here. Now, as far as shorts, well, what can we look out for? Well, as far as shorts, there is a possibility. Obviously, we've kind of rallied down a bit, and I've been stopped out of the trade I was in. But there's a possibility we rotate up again, treating this as a range, and we look to enter a short from that sweep of that high to bring that down. Okay, now based on that idea, we're going to be looking for a short there. That's going to be an area that we look out for a short. Now, what do we have above us? In the case we carry on breaking up, if we carry on breaking up, well, you could look to enter on that retest. So once it breaks, look to enter on that retest to drive it all the way up. But I would be careful there because we've got this prior supply zone, okay, which we broke from, and that supply zone could be acting as resistance. And not only could it be acting as resistance, we've also got this internal 45-minute zone, as well as another zone. It seems like I haven't quite checked what time frame that zone is, but these are two potential magnets / repellent points. All right, so what do magnets do? Magnets attract or repel. That's exactly what supply and demand zones do. Okay, they either repel the price away or they attract it and it breaks through. Okay, so we've got two magnets there which we could potentially get reactions from. So let's say we start to rally up, we could get a reaction from there, break structure. All right, then that means this becomes the bigger range. Okay, and then we get that rotation down. That's a possibility. So just be careful there for those of you who look to long the retest of that break up. If you are looking to do that, make sure you are watching the market structure as it develops up, If you see something like that, well, time to take profits, or time to at least de-risk, or time to at least get the hell out of that trade. Okay, so that's what we're going to be looking at for. I'm not going to put that POI in there, but I'm just going to leave that to you as an idea. Now next, well, because these are zones, well, it makes sense, and we can potentially get reactions of these zones. It makes sense to look for shorts at those zones. All right, so that's what I'm looking out for. Those are the scalps that I've got my eyes on. In my opinion, those are the highest probability plays. But I'm sure if you've got, alternate levels that you think might be where we get that reaction from, then by all means. All right. And if you're just using indicators, that's also fine too. It's all based on price action. It's all based on these candle and these bars. So why not? So since we made this massive drop down, what has price been doing? Well, price has kind of just been working its way up. Higher high, higher low, higher high, SFP of that low. Higher high, higher low, higher high. All right. Now at this point, this is why I started to think, we have got a reason to go up, don't we? Okay, this fair value gap. So could I look for a long here? But I was apprehensive. Now, why was I apprehensive? I was apprehensive because, let's play this back. If we use the bar replay tool, okay, this is good. We've gone through all our trades now, so I can just talk to you about how I entered this one. And for those of you who care about that. Okay, so where was I before I entered this trade? If we take this back a tiny bit more, let's take it back to about here. So once we're at this level, what am I thinking? Well, I'm thinking, right, well, first of all, this, we're gonna, do you know what? We'll use this as a range. We're gonna replace it later on. Okay, this is what my structure looks like at the minute. Yeah, this is what my structure looks like at the minute. Of course, we also have an internal range here. We can treat this as like an internal range. All right, but this wick kind of ruins things, but that's okay. So as price starts to rally up, I was apprehensive for one reason and one reason only. Why would I be looking to long, which I did, at premium? Does not make sense unless you have a reason to. Now, what's your reason to? Reason number one, gaps to be filled. Reason number two, supply zones above us, magnets above us. Okay. Now, how did I then enter that trade? I would, if you're a beginner trader, if you had been trading for a year, 2 years, I wouldn't recommend you make a habit of this. All right, but once you've traded for a long time, you can just watch structure and use market structure to guide you. So at this point, what did I do? Well, I said, okay, cool. We are at this level. All right. Well, we look to have developed another range here. Okay. So what can I do then? Well, I can draw out that range. I can treat this as my range. All right. Now, what does that mean then? What does that mean? By the way, we didn't talk about this, but I'm sure some of you enter this nice Trinity model 2. Yeah. We had tap 1 or model 1 as well. Depends how you want to look at it. Tap 1, tap 2, tap 3 for a nice short down. Or tap 1, tap 2, tap 3 for a nice short down. Okay, depends how you want to look at that one. Okay, I didn't talk about that because simply I'm probably asleep. What time is that? Oh, it was Sunday. I don't trade on Sundays. Okay, I didn't even look at the charts. On Sunday, I was with the family and then I went to see a mate. We were having a great time. All right, so what is going on here? What is going on here? Well, we're not gonna talk about this Trinity model because you guys know how to trade that. That's fine. What we're gonna talk about is how I enter this long. Well, as I drew out my range, what am I looking for? I'm looking for a range high, range low. So I'm saying if my market structure at the moment is, higher high, higher low. This should have been a higher high that took us out. It wasn't that strong, so the chances are we may be coming down. We're looking to distribute. Chances are we may be coming down. And not just that, as we come down, okay, if we do not get a reaction off of any of these zones, and if we do not break through this zone convincingly, what's going to happen? If we SFP this zone, we're going to rotate back up. And that's exactly what happened. I was watching that zone to look for rotation up, carefully looking at market structure. Price came down, and then what did price do as it came down? Price came down, giving us, low high, low, okay, forming another little accumulation range, right? And at this point, what is the market cipher doing? The market cipher is giving us the nicest, juiciest divergence in the world. Okay, so what's that? Where is that? Well, we have price creating low lows and our momentum waves creating high highs, giving us a nice divergence. So you could have waited for that break in structure. That break in structure happened here, tiny little break, as you can see. Then we got that retracement, and then we could have ridden that further up. All right, and that's exactly what I did, and that was a nice trade. How did I manage that trade? Well, I don't mess around. I take profits early. I took a profit here, okay, and I moved my stop loss to entry as soon as we broke out of the range. So I de-risked that trade. I took another profit at 4R, so 4x risk to reward. And then I put my next TP at 6 risk to reward, which did not get hit, you know. Now my next TP was somewhere up here. So what happened was price retraced, and price, I believe, came back down to stop me out. All right, and that's fine. That's great. All right, so that's it. There we have it, and that's what we're looking out for. I hope you guys have found this useful. Make sure you set your alerts, and I'm going to also post the link to this chart, so my personal chart, so you can have access to it. And I'm going to post this on Discord. So if you do want access to that, follow me on Discord, hit me up, and that should be on the group chat on Discord, and that is right here. Okay, that's going to be right here, as well as the YouTube video. Okay, so anyways, it's been a blast. I will see you guys tomorrow.